The National Endowment for Liberty presents At Issue, the in-depth forum on freedom in America today. Hello, I'm Mike Hayes. The host of At Issue is the physician, author, and former member of Congress, Ron Paul. Ron?
Thank you, Mike. Never in history have the American taxpayers been saddled with a bill as big as the one we are being made to pay to bail out the savings and loan industry. Thousands of dollars for every man, woman, and child. In today's program, we'll talk about why it happened and where we go from here.
Our program, as usual, will consist of our probe report on what's at issue, reactions from a group of average citizens somewhere in the country, and an in-depth analysis of the entire subject by our panel of experts. We'll begin our probe report, the FSLIC Fizzle, following this brief message.
This is one in a series of programs that takes a fresh look at critical issues affecting how you live and how you use your natural rights as an individual to make decisions about your life. At Issue is brought to you by the National Endowment for Liberty, because we agree with Thomas Jefferson, that government governs best that governs least. The National Endowment for Liberty is a nonprofit, nonpartisan educational project. We do not accept state or federal funds. In fact, we don't count on any agency of government at any level to keep this program on the air. Instead, we count on the generous gifts of individuals, people just like you. Write to us at Post Office Box 580099, Houston, Texas 77058, or call us at 1-800-333-3545 and ask for extension 909. If you missed any part of this message, keep your pencil and paper handy. This information will be repeated.
Remember when you used to hear commercials that ended with the words, member FSLIC? In case you haven't noticed, they're gone. In their place, we have news articles about scandal in the savings and loan, or thrift industry. A lot of those stories have dealt with alleged crimes of savings and loan managers and bribery of public officials.
This is not what caused the problem, although we would have been surprised if that had not happened. What caused the problem was the fact that the federal government has maintained deposit insurance, which gives depositors a false sense of security that every S&L is perfectly safe, and that therefore they can put their money in it and not lose any sleep at night. That basically gave S&L managers a license to steal, which is in effect what they did.
Economists at the University of Georgia have also studied the S&L crisis. Like Richmond, they cite deposit insurance as the problem.
The bottom root cause of the scandal was the existence of government deposit insurance, which created incentives for people who ran savings and loans to take exceptional risks with the depositors' money, knowing that depositors would not discriminate against these risky savings and loans by taking their money elsewhere. As long as depositors could feel that their money was safe because the government was insuring their accounts, they simply put their money in the banks that offered the highest rate of interest.
With the industry already in trouble, the government in 1980 actually raised the size of individual deposits covered by the insurance to $100,000. It was an open invitation to financial disaster, and the mistakes didn't stop there.
There's a second problem, which is that the job of closing banks has been given to federal agencies, which have decided that in certain cases it would be inconvenient to close banks even though they were insolvent. In some cases, those decisions on which banks to close may have been influenced through corruption. We see that in the Lincoln thrift scandal now. But the authorities decided not to close insolvent banks and thrifts, and the result was that the owners of these thrifts, since their capital had already gone to zero, decided they had nothing to lose and everything to gain by engaging in very risky lending practices. And deposit insurance basically underwrote that risk. That is, if they took a gamble and it paid off, then the bank would be worth something again. It would become solvent. If the gamble didn't pay off, they still had nothing, and the deposit insurance agencies ended up holding the bag.
And when FSLIC itself was broke, who then held the bag?
Well, of course, the American taxpayer. That's what the bailout is. The bailout is a bill passed by Congress, signed by the President, which says the American taxpayer will have to pay $300 to $400 billion to bail out these failing businesses. Ultimately, it's always the taxpayer that is left holding the bag. That was always the truth about deposit insurance.
In Boston, around 1920, a con man named Charles Ponzi developed a ripoff that ultimately landed him in jail and his name in the language. A Ponzi scheme works like a chain letter. Investors put in money. New investors' money is used to pay off the old investors. But the company never actually produces anything. So when the supply of new investors runs out, it collapses. Ponzi's victims were his unwary investors. But because of deposit insurance, the victims of the S&L Ponzi scheme of the 1980s were you and me.
The ultimate cost is going to be $1,000 for every single man, woman, and child in America. And that's at the low figure. Last October, in August, September, October, when we were working on this legislation, we felt that it was going to cost up to about $284 billion. That was the high side of the projection. But that's when we were told that we are going to have to bail out some 300 to 400 savings and loans. Now we are told that we are going to have to bail out, that is the federal government and the taxpayer, bail out some 1,000 savings and loans. That's 1/3 of all the savings and loans we have in America. And of course, if that happens, it's going to cost more than $1,000 for every man, woman, and child in America. So we are talking about a huge problem and a huge amount of money.
Deposit insurance was supposed to protect the little guy. Does it?
It's a phony protection because they're saying that if your S&L goes under, we'll tax you to restore your deposits. And not just you, but your neighbors and everybody else. So I think it's a fraudulent sort of protection because they're just going to take it out of one pocket to put it in another pocket.
Majority of the depositors in this country have less than $10,000. So that we went to $100,000, the question and the argument can be made that it was to protect the financial institution and the high rollers and the crooks that got into the business and not to the depositors.
Well, obviously it wasn't directed at the small investor because it could have been kept much lower. I don't know that many people who have $100,000 in a savings and loan. So it can't be for that purpose. It's a form of subsidy to the savings and loan industry so that people with a large amount of assets would consider putting their money in there. They might not have if the level had been kept at $2,500 or at $50,000.
You're thinking of this place all wrong, as if I had the money back in a safe. The money's not here. Well, your money's in Joe's house. That's right next to yours. And in the Kennedy house, and Mrs. Maitland's house, and 100 others. You're lending them the money to build, and then they're going to pay it back to you as best they can. Now, what are you going to do, foreclose on them?
I got $242 in here, and $242 isn't going to break anybody.
Jimmy Stewart's customers didn't need $100,000 worth of deposit insurance, but each one of them is a taxpayer, too. And because of FSLIC deposit insurance, which protected mainly the high rollers and hotshots, their real-life counterparts, you and I, wound up owing thousands of dollars each when the Ponzi scheme ended and FSLIC fizzled.
And so we're not being fair to the American taxpayer. We're not being fair to the people who put their trust and confidence in us. What we should do is close down the savings and loans, address this issue, make the tough decisions, make sure it doesn't happen again, and make sure that the Justice Department goes after the criminals, the people who perpetrated this tremendous fraud and expense on the American taxpayer.
Remember when life was simpler and problems were solvable? When you could rely on good common sense and your own honesty and initiative to see you through? That was back before government regulation got so tangled up in our public and private lives, before paperwork and arbitrary rules took over and individual choice was locked out. The National Endowment for Liberty believes that most of our problems cannot be solved by government, that too much government is in itself a problem, not a solution. These programs are made possible as a public service by people who believe that moral and political rights go hand in hand with economic freedom. Write to us at Post Office Box 580099, Houston, Texas 77058. Or call us at 1-800-333-3545 and ask for extension 909. We are the National Endowment for Liberty. Liberty can set you free.
Every week it grows a little bigger. You know, they're giving you the most optimistic outlook they could see. You know, last year was $40 billion. I think they authorized somewhere in the neighborhood. Now it's up to $300 billion.
For what?
To finance the bailout. You know, and it's,
Each week on At Issue, we show the probe report you've just seen to a group of citizens somewhere in the United States. What you're watching are the unrehearsed reactions of a group of people in Media, Pennsylvania, to the probe report, the FSLIC Fizzle.
I would like you to raise your hands if you have a savings account. Raise them real high. Keep them up. Okay. Is there anyone here who has a savings account of $100,000 or more? Raise your hand.
You know, people don't have that much money in the bank. The insurance rate should drop. You don't need to insure each account for $100,000.
Originally, the SNL was set up for people to buy homes with. And of course, due to competition and high interest rates, they were allowed to diversify or go into other areas of investment. On top of that, they raise the insurance up to $100,000. All of a sudden, you have $100,000 to play with per account, and let's go make some money.
If I'm at Atlantic City and I went and you guaranteed me that $100,000, and I went and I spent it, then I should just come back and you give me another $100,000 and say go again.
I don't think you should. If people make mistakes or they were corrupt, I don't believe in giving in to them. If you bail people out, they're just going to do the same thing over and over again. I'm tired of it. We always do it.
Yeah, the whole problem
It's
is
either
though, we're the
welfare
ones
or
that are getting
something
hurt. If you're not going to regulate an industry, or just per se, I guess there is some regulation taking place, and you're going to insure these industries, there seems to be a conflict there. Here you're saying do what you want, compete, yet we'll back you. I mean, it just doesn't make sense.
Maybe just do away with all the savings and loans. If the economy, maybe it was right in the 30s and it's not right today, let our economy do its own thing and see what happens. The big banks will take over, and maybe that's the way to go.
The FDIC regulations aren't very much stricter than the SNL regulations, and there is a crisis in the FDIC too, but it's not being. FDIC is not. There's a crisis there, but it's not being brought up like the savings and loan. The savings and loan industry is the big thing on the table now. After we get through with that, you'll hear the FDIC.
It makes me very skeptical about these things, that it's going to be resolved, because I don't think it. My opinion is it won't really be resolved. They will tell me it is resolved, and we will go on business as usual. But I wish I had an answer what to do. As I say, I could. If they offered me the job, I would say I decline.
I think I would too. Maybe our panel of experts has some answers to the problem. Melanie Tamman is a director of the Financial Services Project of the Competitive Enterprise Institute and a widely published writer on our topic. Dan Mitchell is Senior Fellow in Political Economy for the Heritage Foundation and a former staff official in the United States Senate. And our host and permanent panelist is the chairman of the National Endowment for Liberty, Ron Paul. Ron, how in the world did we get into this mess?
Well, it wasn't easy, because the bureaucrats and the politicians took a very strong economy and a very strong currency, and they had to work real hard to get us to where we are. But the seeds of this problem were sown in the early 1930s. In the early 1930s, we had a revolution equivalent to the revolution going on right now in Eastern Europe. In the midst of our Great Depression, it was determined by our intellectual leaders, erroneously, by the way, that capitalism failed and the gold standard was a total failure and something had to be done. Government had to do a lot more. So even in the Hoover administration, we had the early seeds sown in the Federal Home Loan Bank Board and the bank system. And from then on, it's been continual government intervention and interference building this gigantic Ponzi scheme. And I think it's important to distinguish for our listeners the difference between the system that I think is corrupt intellectually and corrupt in a moral sense, versus the petty corruption that we see. It's so easy to make a story about a corrupt lender in an institution. But claiming that's the whole problem, I just don't think that's the right tack to take. I just wonder if my panelists here today would comment on this. How much emphasis would you place on the system, and how much emphasis would you place on the administrators of individual savings and loans for the blame for this problem? Melanie?
Well, Ron, I have to say I overwhelmingly agree with the specialists featured in your background piece. We have a lot of blame to place on the deposit insurance system. A very modest system that was set up, and probably prematurely, in 1933, has ballooned over the years into a very blanket safety net, protecting not $100,000, not an insurance limit per depositor, per person, as was the original intent of the 1933 legislation. But the limit is now, and has been from the very beginning, per depositor, per deposit. So now we have $100,000 per deposit coverage, and the regulators are not even implementing that. Monies over $100,000 are being bailed out and covered all the time.
Yes, Dan?
Well, I would agree with you that we can't look at whatever corrupt officials were in the thrift industry. There were some, and they should be punished, but the point is that they never could have misused the money if it wasn't for the government deposit insurance backing them up and making it so that nobody had an incentive to monitor the system. Government created the problem. Some people misused it and manipulated it, but it never would have happened without the government interference in the first place.
You know, one thing that I learned while serving in Congress, and especially on the banking committee, was that the goal of all the legislation was to do what I call contain the run, provide reassurance that everything is okay. Before we had the insurance, people would take their money out of a bad institution. Today, it's literally mandated that people keep their money in and do the wrong things. There was a resolution, I believe it was in 1982, that we passed on the House floor against my objection, and it essentially said, totally ignore the insurance, and I think that's exactly what they're doing. It said that all deposits would be backed up by the full faith and credit of the United States government. This was not legislation, it was a sense of Congress resolution for reassurance to the savings and loan that really don't sweat it. And I think the collapse of the Continental Bank was a good example of what government does regardless of what the law shows. I mean, foreigners who had deposits well over $100,000 still got the deposits out, mainly to keep the assurance going. But how much benefit is this? I mean, there is an immediate benefit. There has to be a political gain to allow people to know, well, I haven't lost my money. Otherwise, there would be the collapse of the system. How do you resolve this immediate political need to reassure people versus the long-term problem that we perpetuate?
Well, we have to follow through on the promises that have been legislated up till now, unfortunately. Taxpayers have to bail us out of this mess, you and I and the rest of us. But going forward, we have to make sure that the root causes of the problem are fixed. And the root causes, as many of us agree, is this pernicious deposit insurance system that has become a very blanket guarantee that has lulled depositors to sleep. We have to put the discipline of the marketplace back into our banking and thrift system. And there is this bogeyman now in discussions on Capitol Hill about, oh, we can't expect depositors, average depositors, to pay attention to the health of their banks and thrifts. We can't expect average Americans to know how to read numbers about balance sheets. Well, this is a bogeyman. If we start implementing even the $100,000 coverage level and not bailing out large, sophisticated depositors with money over $100,000, and that's what's been going on as well, we will get a lot of market discipline by the large, sophisticated players monitoring the banks. That's not even happening now.
Melanie, let's hold that thought for just a minute. We'll be right back after a brief break, and we'll return to more views and comments on the subject at issue in just a moment.
Throughout this series of programs, you will see ideas examined that affect every part of your life. We'll look at issues from a new angle, not from the left or the right, but from the perspective of individual liberty and responsibility. We believe our founding fathers were right. We are endowed by the Creator with certain inalienable rights, and among these is the right to life, liberty, and property. We do not accept your money transferred through state or federal government agencies. Instead, this series is funded by direct voluntary gifts from individuals. We are the National Endowment for Liberty. Call us right now, 1-800-333-3545, extension 909. For a transcript of this program, specify the subject and send $5 in a stamped self-addressed envelope to P.O. Box 580099, Houston, Texas 77058. The National Endowment for Liberty, providing information on America's most precious resource, individual freedom.
Okay, we're back. Ron, you were about to raise, I think, the question of the whole insurance idea.
Yes, insurance, of course, in a free market is a very important element to protect people and to guide the market mechanisms. How do you think it would work if we were able to privatize the savings and loan industry, get rid of this huge government-protected cartel? Do you think there would be private insurance that would protect depositors? Dan?
Well, I don't think we should try to predict what the market would do in the absence of government regulation. There would certainly be some private insurance. It might be that certain banks would offer insurance and they would advertise that to customers. It might be that other banks would not want to pay for the insurance and they'd pay a little bit higher interest rates, but depositors would have to judge the risk of putting the money in the institutions. The beauty of a free market system is that you have options, you have choices. It's not one big government mandate that everybody act the same that's subject to political manipulation.
See, it seems to me like there would be a problem as long as we had a banking system or a monetary system that permitted fractional reserve banking. That in itself is a fraud because it's a Ponzi scheme that two people are using the same money at the same time. I'm not sure that private industry would want to insure that. But if we were truly free, it seems like that would mandate that we have a sounder banking system as well. The banks then would have to respond to the insurers.
Well, I'd like to add to that, Ron, that the property and casualty industry is not in a position to get into insuring bank and thrift deposits. But many have argued that the banking industry itself is sufficiently capitalized. It has enough private capital to insure itself, and there's a whole science of co-insurance, self-insurance schemes. I'm speaking of something similar to what Lloyd's of London does. And if we could move back to $100,000 per depositor, one time per person, you would have enough monies that were formerly insured that are now uninsured, that you would probably see sophisticated depositors and institutional depositors telling their banks, we want a private insurance alternative, and then you would see a bank industry provided alternative growing up. That's what many of us have been arguing.
What do you think the odds are that the Reform and Rescue Act of 1989 is really going to work? Has this done any real good? Has it changed anything significantly? And how much do you think it's really going to cost? You know, we heard in the preliminary report that it could cost $1,000. I've heard some estimates up as high as $5,000 or $6,000 per taxpayer. So what are the odds that we have the major part of the problem behind us?
I think the odds are low. The only thing that the bailout solved was that it closed down some of the insolvent thrifts that were costing the taxpayers money, but there wasn't enough money to close them all down. It didn't address the fact that we have the same deposit insurance problems in the banking industry with the FDIC insurance, and I think we're going to come back and face this issue again this year. And that's where you see the figures for $300 billion, $400 billion. The politicians have been underestimating the cost all along because they want to figure out a way to glide through, don't rock the boat, and it probably won't be until there is a true crisis that they will address the problems, which is the deposit insurance system that they set up.
You know, that is about the way I see it. Seeing it politically, I don't understand how we even might have a chance of having significant reform because the political forces are so strong in the misunderstanding, because most people are reassured that their accounts are insured. So I'm frightened to think that it's going to get much worse and that we're going to have a crisis and a further collapse of the system before we see any significant reforms.
Well, we're already starting to see with the banking industry various similarities to the types of forbearance from closure that took place in the thrift industry and allowed the losses to mount and mount and mount. Congress in 1987 passed a bill which involved a a section allowing the regulators to forbear from closure with the banks.
Folks, our time's getting a little short, and maybe we need to wind this up. So let me ask each of you to comment on the short run for a moment. Dan Mitchell, what's the next step? What's the first shovelful we're going to have to handle in order to dig ourselves out of this?
I think somehow, some way, we have to move away from government deposit insurance and let the market instead determine whether or not insurance is necessary or useful. Unfortunately, there's a lot of political demagogues who will fight that.
Melanie Tamman.
I think we need a lot of reform legislation, Mike, but first off, we need Congress to say no more extending coverage to large depositors with monies over $100,000 and go back to coverage per depositor, $100,000 per depositor.
And Ron Paul, what's your view?
We need to change the entire system. Not only the banking system do we need to free up, but we need to change the monetary system as well. I cannot see how we can solve one without dealing with the other. They provided $75 million last year to go after the corrupt business managers of savings and loan. But the really mismanagement are the politicians and the bureaucrats who ran it. It was the most over-regulated industry ever, and yet it still collapsed because the philosophy is flawed. The system is wrong. It's not a free market. It's a government cartel run by powerful forces, and it's run on a fiat monetary system, a system that is destined to fail. And we have to address this subject, and we can't do it with tokenism.
Any other thoughts?
Well, I think it's time that we all got together, did what we could, and I think it is important for what we're doing here is to change people's attitudes, because I don't believe on the short run that we can do this politically. But I think on the long run, it's educational, that people's ideas have to be changed, that we have to accept the ideas and know why we need a sound free market system in banking.
Well, that's where we'll have to leave it. I want to thank our panelists for being with us, and I want to thank you for watching. We'll be back next week with another vital topic at issue.
The National Endowment for Liberty would like to acknowledge the inspirational contribution of the Ludwig von Mises Institute and the sponsors of At Issue, whose generous support makes these programs possible.